even if prices did dip in Windsor, you would be fine, right? Because
I don't over leverage the out of my.
Didn't even get to cross.
Okay, so today's topic is going to be about the doom and gloomers. We've got a couple articles that we're going to reference. One just came out. When did that come out? December 17th. Today's what, the 19th?
yeah, a couple days ago. So.
Exactly. So the 19th, and we're going to talk about this because the best people in the entire country for predicting economies and predicting the real estate market and markets and just in general can't do this. So basically, what makes other people think they can?
Yeah.
So
and let's show some other articles and show how how maybe they haven't.
So let's scroll through this article here a little bit and let's give everybody a little bit of
First of all, I just love the headline, doom and gloom.
Yeah.
So
what does the actual headline read? What does it read? Go up there, Jesse. RBC predicts doom and gloom for Canada's housing market.
Now that's not a balanced, rational headline, right?
No.
It's not like, there could be some ups and downs. It's just a doom and gloom. Now, a lot of people are just going to read that headline and then go report back to their friends that the market's
throw it up on
crash.
Facebook and be like, we're all
market's going to crash or whatever, right? So, so let's start there, and then let's explore the article. What is it actually telling us is likely to happen?
Yeah, scroll down there, Jesse. So Canada's largest bank reported a 3% increase. Okay, well, that's relevant.
They had a monster quarter.
They had a great quarter. Yeah. However, after reporting better than expected profits in the most recent quarter, RBC made special mention of headwinds next year. The premier lender predicts a doom and gloom scenario in Canada's housing market. RBC executives see home prices dropping by 8% and remaining depressed until late 2023.
It's a long time.
Yeah.
A couple years.
So, what else does it say? Does it say anything else? Scott, go over this.
Yeah, so RBC believes the housing market is not yet in the clear, despite defying all logic up until this point, and posting record sales in recent months.
Now, here's the thing.
Yeah.
That statement that you just read, despite defying all logic, come on.
Yeah.
I buy real estate literally based on logic, and they're telling me not to buy it on logic. Come on. Yeah. It's totally counterintuitive. Anyways, keep going.
One reason for the double down on its real estate forecast is the unemployment in Canada, which the rate, with the rate staying at 9% until March 2023, mortgage growth, trading and underwriting activity will slow down. RBC also expects loan delinquencies and impairments to rise in fiscal 2021. The emphasis or greater weight now is falling on home prices. So let's just start with, I remember them saying similar projections at the start of the pandemic, okay? And we have an article up here from RBC, I think it was in March or April, where they predicted a slowdown in the spring market and all these other things that just didn't come to fruition. So the main thing here I want to talk about is just, in my opinion, doom and gloom is a mentality. Mm-hmm. And there's a lot of people that always have that doom and gloom mentality. I'm an optimist, right? I don't know about you, Dan. Not that I'm irrational.
What did you call me?
Cautiously optimistic.
A cautiously optimistic.
Yeah, so I think that's
accurate.
reasonable, yeah. Right? But I lean towards the optimistic side, right? I'm always going to be on the optimistic side, because when you're pessimistic, how can you make moves in the business world or in real estate or whatever?
Yeah, you can't. You're always going to be kind of scared to.
I remember I was making posts about this on my forum back in March or April, and I was trying to tell people, look, keep a level head. This is when the lockdown just started. Nobody knew what the hell was going on. Look for opportunities. That's what my message was. If prices dip, the long-term trajectory hasn't changed for real estate. Look to make moves now, because this opportunity is going to go away at some point in time. At that time, I was seeing articles like this as well from RBC predicting the slowdown. So let's scroll down and see what they predicted. This was March 2020. Again, the height of the pandemic. Nobody knew what the hell was going on. So let's start there. Social distancing to severely disrupt the spring house hunting season.
Yeah. So Scott, you're a realtor.
Yeah.
What happened in the spring?
It was the craziest spring of all time, at least locally, probably all across Ontario.
Yeah.
It did not slow down at all. And in fact, it actually made it was it was almost as if it was fuel to the fire. Like it created more desperate people to buy housing, right? Because there's just not enough, as we know. Now, here's another troubling factor with reports like this. They're looking at Canada as a whole. I don't give a damn what's going on in Prince Edward Island or Newfoundland or some small town in wherever.
Yeah.
What I care about is my hyper local real estate market that I'm personally investing in, right? So that's another troubling thing. Now, you were saying,
I was gonna say you have to understand, like, they're factoring in a lot of these other like hyper inflated markets, like literally Vancouver and Toronto, which as a whole combines a lot of that buying power to literally sway these numbers. Exactly. If you aggregate that out and take out Vancouver and Toronto, that 8% that they're predicting that real estate's going to dip by, that might only be a 1 or 2% dip, because the real estate markets in those cities are like astronomical. And
here's the thing though, they haven't actually, other than the condo sphere, nothing's actually dipped, especially in single family homes. The prices are still rocketing in Toronto. I don't know about Vancouver, but they're also factoring in Alberta, which is in the middle of an oil crash. So I don't care what happens in Alberta. I'm not investing there. So now, for people that are reading headlines of doom and gloom, like this is too broad to apply to any market. Because I'll tell you right now that in Southwestern Ontario and in Windsor specifically, this is not accurate in my opinion. Why? Because there's plenty of demand and not enough supply.
Well, that didn't even happen.
No, it didn't happen at all.
Not even close.
Here, in Windsor, it didn't happen.
Well, it didn't even happen anywhere else.
Not that
where did it happen? I don't know.
It didn't happen in Toronto.
I didn't hear about anything happening.
No, neither did I.
So, if anything, the only thing that I have heard about happening is the Toronto condo market is taking a hit right now, and a fairly big one. But that's it. But that's also based off of investors mostly buying according to appreciation. That's it. That's why I don't buy that shit. So that number is a speculative number that or based on people that went in and they're wannabe investors and they bought speculatively and now they're getting crushed.
And if you got crushed based on that, like to a certain extent, like you have to be like, okay, shoot, I got caught at bad timing, right? Like I was buying on appreciation, it was working for 20 years straight. Now all of a sudden it's not. Black swan event, couldn't predict it. I gotta eat my lunch right now. I wouldn't be necessarily like terrified or anything, right? Like, but we're not buying for that anyways, right? Some people were, but we're buying for cash flow positive assets that even in this crash or pandemic, even if prices did dip in Windsor, you would be fine, right? Because
I don't over leverage the out of my.
Well, do you have any properties that are not cash flow positive?
Now, I do. The properties on the water that I bought don't positive cash flow.
Condos?
No, the actual like literally like housing on the water that
like rental properties.
Well, I bought them for rent. I bought them for rental properties with the anticipation to eventually build my principal residence on that lot.
Well, that doesn't count.
It's totally different. I know that.
It's like
totally
development stuff.
Yeah, it's totally different. However, I went in knowing they're not going to cash flow, but I also went in knowing that even if they're not cash flowing and even if I'm losing money every month on there, I know eventually when I do sell, even in the worst economic scenario, I know I'll still make money because Waterfront just has never taken a hit here, ever.
And you're in a financial position to weather whatever storm comes. You could weather that storm for years,
so that's
right? Like
really what we're saying is it's not totally not predictable.
Your rental properties
not applicable.
are all probably cash flow positive. I'm assuming. Every one of them, and so are mine. So in an 8% dip that they're predicting now, if we go back to that previous article, they're predicting an 8% dip. First of all, I don't think it's going to happen in Windsor or in Southwestern Ontario. Second of all, if it does, like I'm over here saying good, because I'm in acquisition mode right now. I want prices to be 8% cheaper because when prices collapse, do rents typically drop with real estate prices? Historically,
sometimes like yes, but not as fast.
Yeah, I don't know. I think historically, I don't know if we can pull up a chart or something. I think historically, rents don't typically drop in a recession.
No. So the only thing that I'm basing this off of was obviously when I went and bought that or when I was doing all the due diligence and doing like the all the background work on buying U.S. real estate. When we look to the worst case scenario in 2008 when the U.S. had that real estate crash, we did see when property declined in the U.S., rents somewhat came down.
Not
Somewhat,
as- yeah.
not even close,
at the
not
same
not
percentage.
close to what. No, but just a little bit.
Gotcha.
Not even like arguably not even like worth like discussing.
Yeah.
Now I can actually show you if you guys if people want, I can actually show you trends of the 2008 real estate market and the program that I use, CoStar. It'll show what actually happened in each state and even in the US as a whole.
That'd be super interesting.
Yeah, and I could show you the dip in rental rates, home property values. It's mostly based off of like this program. Actually, it doesn't work off like single family homes. It works off of five units and up, because in the U.S. that's what's considered commercial. So I can only tell you based off of like a per unit price and also market rent where that was throughout history in the last 20 years.
Super interesting.
Yeah.
We should do that another
Yeah.
time. So in the U.S. it might be different.
Yeah.
I looked into Canadian because again we're socialists here.
Mm-hmm.
There's not a lot of supply here. So
Yeah.
there's not a lot of places for people to go. In the States, you can move to any of the 52 states.
Yeah.
There's millions of it's just a different market.
Yeah.
So definitely interesting. But I think
Yeah.
in the Canadian situation they didn't really dip. And let's just say worst case scenario they did dip, but not at the same rate of prices. That's actually a good thing.
Yeah.
Because it makes your assets that you're buying on that 8% dip even more cash flow positive. Like it actually makes it easier to buy. And I think this is what's going to happen if and when the crash does come, right? It's inevitable. It'll come at some point. When that does come, I'm telling people to buy right now. I'll still be telling people to buy when it crashes. And people are going to say, oh, you're a hypocrite. And I'm going to say, no, I'm not. It's even better to buy now. What I'm saying is don't try to predict the market.
Yeah.
Because
It's the same thing that I see people, the same mentality that I see people use in the stock market.
Oh yeah, big time.
It's the same thing. So why is real estate any different? If anything, real estate is way more safe.
Oh,
Like 1,000
times.
times more safe.
1,000.
So people, when the stock market dips, what do? They buy more stock.
Yeah. Well, they should.
Yeah,
Most
or-
people don't.
Yeah.
But
So that's commonly what I hear.
Yeah.
When the people's arguments when the stock market starts to take a dive, and they say, well, I treat that as an opportunity. But as soon as you talk to them about real estate, it's not an opportunity now.
yeah, all of a sudden.
Yeah,
it's
I don't
terrifying
understand what they want.
Yeah.
And in the stock market, like you could lose your shit. No, there's no like.
There's no hard.
Yeah, there's no physical asset there
You have
to
no control over it.
Yeah, there's nothing there for you to come out on, and sell or whatever. There's nothing there. You have nothing.
Yeah.
So
You have
if
a
you-
piece of paper, a theoretical piece of ownership, which there is truth to that in my
Yeah.
opinion, but it's not the same as the hard physical
No,
asset.
it's not even close. Not even close.
Of real estate. So I guess what do we take away from this? What's your perspective on the doom and gloom? Again, you're cautiously optimistic.
Yeah.
As an investor, when you see headlines like this, how do you process it in your mind?
Yeah,
As an investor.
The only thing that I've ever done since all of this started popping off, and even the only thing that I've ever done from day one was I bought cash flowing properties, and then when this started happening, I was more careful with what I bought.
Gotcha.
That's it. I wanted property that I knew could sustain. I typically use like a 20% dip. It won't hit 20%. Arguably it won't hit 20% because again, if we use the worst economic storm that ever happened in the real estate market in the US in our lifetime, it was 8%, which I referenced in the last podcast. And lo and behold, this is referencing 8% too. So if our market hits an 8% dip, it's not even that, like, what are we even talking about?
Yeah,
on $400,000, what are we even talking about? What is that? 30 grand?
8%.
Like 35? Like $32,000?
$32,000.
It's not even worth talking about.
$32,000 on paper, right?
Yeah.
Like that's what it would be because it doesn't really matter.